Bank of Canada, 25 basis point cut. Totally expected. There's no surprise here. There's a 99.9% chance by the last count that would be what the cut is, because they analyze the chances of a cut. Who are they? They're the marketplace of bond traders, economists, and other interested parties who analyze the probability of a cut. So they all said the same thing. 100% towards the end. It was as low as 50% back a couple of weeks ago, but it ramped up all the way. The fear of the Trump tariffs ramped it up all the way to 25% cut, and that's what we got. So what's it all mean? What is 25 basis points cut mean? It was totally expected. I've been talking about it for weeks. What's it mean? It means that the Bank of Canada governor, Tiff Macklem, is thinking, let's just do things that create no uncertainty. Like, this was what was expected. Let's just do that. Now, again, good news to everybody who's got a variable rate. Everybody who's got a variable rate is going to be paying less interest within a few days as commercial banks move their prime rate down. Everybody with a HELOC, home equity line of credit, they're going to be paying less. In essence, for everybody who has a mortgage or a HELOC, it's just good news. Fixed rates, no change. I got to start to emphasize that. There's a lot of misunderstanding in some households that if the Bank of Canada cuts, fixed rates are going down. No, they're not. They're not necessarily going down at all. Too much chaos in the bond market for there to be any kind of definitive correlation between the Bank of Canada and what's happening in the fixed rates. It's just the possibility of Trump trade war has just decoupled everything from all rationality. But once again, what does it mean? What does it mean? It means that Tiff Macklem did exactly what he was expected to do. He didn't want to rock the boat. He wanted to keep everything. Now, don't even bother listening to his press conference. Whatever he says in his press conference is meaningless about the future. The future being March and April. So yeah, we're going to go right over February and we're going to go into March. So that'll be the next one. That'll be the next announcement. So in the meantime, there's a lot of chances to understand what's going to happen. If Trump was serious about February 1st, throwing on tariffs, we're going to know, and Tiff's going to know a lot more. Bank of Canada's going to know a lot more then. But what the Bank of Canada does know is tariffs from the United States are terrifying. They're terrifying. The whole idea of the disruption in the Canadian economy that is already faltering with a made in Ontario recession. They're just worried. I mean, hit with tariffs, this is what you can expect. You can expect a rapid reduction, emergency rates. That's if you've got an unprecedented economic event like COVID, it's the opening the door for emergency rates. Emergency rates are like, let's get down to 2% right away or less. So yes, you could have a 3.2 variable rate in 3 or 4 months or less, because that's what an emergency is. An emergency is 25% tariffs on all vehicles and auto parts moving into the United States is 100,000 layoffs, almost all in Ontario. That's not going to happen the first week, but it will only take 4 or 5 months to get to 100,000 layoffs, because the parts are just going to automatically, they're just going to do the same thing they did before. They're going to take all the dies, they're going to put them onto the trucks, and the parts guys are just going to, they all have factories in the US too, almost all of them. They're just going to ship everything down to the US. They're going to rent some space in warehouses. They're going to move all their auto parts into the US away from Ontario. There's 90% of all the auto parts in Canada are manufactured in Ontario. So that's all going to move out. Those people are all going to be laid off. And eventually they're going to redistribute production of actual complete cars to the United States, because all the Fords and they're being built here, some of the Chryslers are being built here will just move. Maybe Ford's closed. I think Ford's actually closed. They're doing a changeover model. But that's all going to happen. And Toyota and Honda, who make full car complete for I think almost every Lexus in North America is made in Ontario. Several models anyway. I think that'll go somewhere else. Not immediately, but quickly, because you can't handle a 25% tariff on every Lexus or every Accord. You just can't do it. You have to find alternatives. So that's what's going to happen. Now, people say, well, wait, Ron, there's going to be counter tariffs. There's going to be this. There's going to be that. Okay, but first comes the disaster. Like cutting off orange juice coming from Florida is not going to fix all the automotive sector, okay? Now, maybe it doesn't happen. That's why Tiff is waiting. That's why he did the expected thing, cut 25 basis points, and now we'll see what happens. But believe me, it's possible for emergency rates. Emergency rates can happen. So let's just sit back and watch. We're going to know a lot more in 60 days.